Welcome traders. In this video I want to take a look at the trade setups today on December 12th and basically go over what was in the last video about what a trade setup looks like and how ZoneTraderPro works with repeating patterns. In the last video what I talked about was needing three things. I needed a price pattern on my 500 tick chart, which I have in front of me right now. I needed to verify that there was not any high risk areas of concern on that 500 tick chart. I then wanted to check the 150 tick chart to identify any areas of concern for a high risk trade. I wanted to see divergence where we have an up bar but a negative delta strength number on the point and figure chart. And last but not least, I wanted to see order flow patterns and delta strength numbers on the 5 range chart. So as we come back to the 500 tick chart, what we see is that the market had entered a strong trend here, and we see a large amount of selling up here. And as I'd previously talked about before, the area, once the price is traded through the counter trend zone, is considered high risk. It's also considered high risk to take a short trade from here because the expected return is that we are only going to return to the minor support level, which we did to the tick. Additionally, up here, we don't know where the price is going to stop at, which is again another reason why we do not want to get involved in anything in this area here. But once this has happened at 10:14, we should be expecting to have an exhaustion trade. And approximately 7 or 8 minutes later, that's exactly what we got. The selling here brought us to a tick divergence exhaustion trade. And I circled this area right here because this is a known ZoneTraderPro pattern, and we did see the buying come from down here. However, this is considered a higher risk because of two reasons. First, the market could trade all the way down to the intermediate zone. So you would have to have a much larger stop on this trade. Second, it is very common that all we are going to do is test the high, so the reward on this trade is not extremely great. So for those reasons, we would probably want to avoid that trade. Although on the point and figure chart, we did have a down bar with a delta strength buy number, and we did have a trapped buyer and POC absorption buy down here. But the trades that we should really be concentrating on are the tick divergence and the trend trade here. And here's the reason why the ZoneTraderPro patterns are so important, and the risk reward that it shows us is also very important. As we can see here, this trade, which would have been high risk, was only worth 3.25 points. The strong trend trade was worth 4.5 points. However, as I said, if we were going to take that trade, we would have to have additional risk. When we get to the tick divergence exhaustion trade, this is a trade worth 6.5 points. And when we get to the trend trade, this is a trade worth 11 points. So when we look at the two types of trades where we have a possible higher risk and lower reward versus where we have a standard risk and reward, we see that we had available 17.5 points in the patterns that presented less risk, and we had only 7.75 points in patterns that represented high risk and low reward. Next, we want to look at the 150 tick chart and look at these four trades as far as risk goes. As the market came up and topped the first time, we again see that The price was in a strong trend pattern, did exactly what was expected, retraced to the minor support zone, and then tested the high. At the high, we had a ZoneTraderPro exhaustion trade, and it traded down again exactly to the blue counter trend zone, again, which was expected. The next thing that happens is this series of moves here, which eventually ended up with the 4.5 point move here. And at the top, this would be considered a very safe trade because we had the tick divergence here at the high. And then here at the next trading opportunity, we had a strong trend reversal, which would have been cause for a little bit of concern as this was all done in one move. However, with the pattern on the 500 tick chart along with the delta strength, that would have been a good argument for taking that trade. We see here where we would have covered at this short trade exactly at a tick divergence blue zone. And one of the important things to remember is that previously I had created statistics which say 50% of the time we trade exactly to the blue zone right here, but we do not trade through it. So when considering whether or not you want to take profits, if you place your target here at this blue zone, you're essentially saying that you didn't want to fight that 50% statistic here. And when we look at it on the 500 tick chart and we go exactly to where the blue zone is, that just makes an excellent point to take a profit from. We would not want to take a trade from here as we've created a strong trend reversal going from blue zone to blue zone here on the 500 tick chart, and that's a 6.5 point move as we just previously discussed. That trade would have again resulted in 4.75 points. However, it does accept some higher risk. Now we take a look at the 5 range chart, and we see that at the first trade we had excellent order flow signals with an exhaustion, a POC extension, and a ZTP order flow, the 3 strongest signals that I have, along with a large trader that came in and sold 400 contracts. Down here at the low, we again see the POC absorption signal being given. However, we did not have any large buyers coming in until over here, which is again justifying the reason why we probably didn't want to get involved in that trade. As the market trades higher, we again see selling where we previously had resistance both here and here. We created a ZTP order flow along with a ZTP stopping ratio, and that gets us into the first 6.5 point trade. At the low where we had the blue counter trend zone at, you again see large contract buyers coming in, and you see the exhaustion buy signal being given, telling you that that's a very good time to get out of that trade. At the trend trade, we again see an exhaustion with a POC absorption, and down here we have a extension zone being created along with large contract sellers coming in. I'd like to point out one thing here and here. The tape reconstruction is picking up the large contract traders trading an even amount, a 200 contract and a 100 contract trade right here. And this is something again that you're not going to be able to pick up with any other software other than ZoneTraderPro, because we are reconstructing the tape to reflect the order size and not the fill size. Then what we see is on the low, we had no ZoneTraderPro order flow signals until we reached the low here at 1040, where we had a ZTP order flow buy, then a test of that low at 1043, where we had a order flow absorption and an exhaustion buy signal. Again, the whole point of this is that we have patterns that repeat themselves, and just about 30 minutes later we again had a tick divergence trade here, which was good for 4.75 points, and we again had that trend trade that followed that good for 9 points. The whole point being that if we wait for the good setups, it is very easy to identify these setups and then just wait for the order flow to give us the permission to enter. On those two trades for the order flow, on the first trade we see that we had a ZTP order flow sell signal with a ZTP stopping ratio. And on the second trade, you could see that we had an exhaustion sell, a POC absorption, and a ZTP order flow sell. This is all happening because there's been some liquidity that's returned to the market, and you are seeing less of the trades that fail due to the added liquidity. And when we look at the point and figure chart for those two trades, we again see a divergence here with the 178, and again a divergence here at the trend trade that was shown on the chart. I'd like to thank you for watching this short video on the trading for December 12th. And if you have any questions, please be sure to give me a call.